Thank you so much for joining me here at Commercial Property Club podcast. It's another series, our master series, where we're bringing ton of value. We're bringing experts in all of the professional team members of the cycles of commercial real estate. We're bringing them on board and have them share their experiences. And today is another ton of value episode in which we have somebody here with us today. His name is Rav Singh. So Rav Singh is a commercial property broker, and he's been doing it for quite a bit. He co-founded Sport Equity, a seasoned outfit in the San Antonio market area. He's been working in the real estate for the last number of years, brokeraging, particularly in this niche of hotels, apartment syndication, and also to doing several things. Funny, he started with graphic studio, with and pretty much, shifted down to commercial investments, and Rav pretty much focused on the commercial real estate right now since 2006. Currently holding the designated CCIM, that's Certified Commercial Investment, the investment
member.
the member, yes, Certified Commercial Investment Member. Very, very prestigious institute, actually. Practically, what that means is that that's somebody that is very, very, very proficient when it comes to investment analysis in the commercial real estate aspect of things, market analysis, what have you. Those are the things you need to have in your tool of things to do in commercial brokerage, and he's done that. He's among the best out there. He's serving the National Hospitality Division at Keller Williams Commercial at some point in time before he started Sport Equity. He's passionate about educating investors when it comes to commercial property in terms of passive income, leveraging tax benefits, and also investing as a lifestyle, which is why we're bringing him on board today to share with others what he has done over the years. He has extensive experience in owning and managing all these investments. We're talking about hotels, apartments, also to throughout this professional journey, he has built a reputation, putting the interest of his client in the picture of things, and that's what you want. You want people on your side when you're doing these deals, people that care about you and what you want in your investment. He's earned the trust and remain truly, truly valuable to his client. He hopes to remain successful through this scope of helping his clients putting their investment first and foremost. As the fund manager, Rav has collaborated strategically with seasoned sponsors also to in deal processes across all these multiple asset classes all over the United States. He's done that. He's doing it with Sport Equity, and is going to offer a ton of value today. And we're going to be talking about a wonderful topic today. So without no further ado, let me introduce Rav Singh and have him just say hello to us, to my viewers. How you doing, Rav?
Yes, sir. Yes, sir. Great. Good seeing you a lot. Been a long time. I've known you for, maybe 7-8 years now,
Yes, sir.
in this space. So thank you for having me on your show.
Thank you so much for joining us here at Commercial Property Club podcast, the master series, just like I said, and we're glad to have you today, Rav, and we believe you bring a ton of value to the table, and you're going to really, really, really add value to our viewers today. How did it all start? But the show topic today, before I start on that role, is role of a broker in deals, identity and deal flow, sourcing off market assets through strategic branding That's the topic we're talking about today. So Rob, how did it all
Yeah.
started with you? Let's
Yeah. So well, I moved in Texas about 22, maybe 23 years ago. We moved and landed in San Antonio. I was in a totally different profession. My background's in graphics, as you mentioned to your viewers. That's what my education was prior when I went to college. So I came in and became a brand manager and a creative director in the creative industry here in San Antonio.
okay.
So while I was serving that industry, I also started having an itch of investing. And this is the time period when all these flip this house and flip that house in TV, we've all seen those
Yeah,
shows.
yeah,
And, I told my wife, we could do that. I could do that. Maybe we could have some extra income. So
yeah,
that's really when this whole idea of real estate bug came in my mind. And so started looking into it. I'm originally from Punjab, from India,
uh-huh.
and one of the things that we have constantly had our folks tell us is that education is
Mm,
foundation, right?
yeah.
And so
Mm,
when we first started looking into investing, those words were resonating in my mind, and so I started looking around and started taking classes just to
yeah,
even learn about what the heck this real estate is and how do you flip a house and what do you do.
yeah.
Started talking to people. So that's where the journey started. Eventually, I got my real estate license, and I started with Keller Williams just because I wanted to do residential. I wanted to flip houses, and what better place than to be with the biggest broker at
Mm-hmm.
that time
Yeah.
in San Antonio. So I did that, but I wasn't able to flip even one house
Oh wow.
because what I had learned through education and through these real estate clubs regarding fair market value and what the prices should be and what the formulas should be, it just didn't make any sense to me because California had discovered Texas and California had discovered San Antonio. And so people were coming, paying cash, buying more than what the value should be for a house. And I
Yeah.
just couldn't. But what I did is I had my license. So second week in the business, a friend of mine's friend who I didn't know called me all of a sudden and said that our mutual friend told us that you have a real estate license. Can you sell my gas station?
Oh wow.
And one thing I've learned in business, because I also had my own design studio that we were working with people, getting clients and all that, you never say no to an opportunity. So
Yeah.
when I got this call from somebody saying can you sell a gas station, automatically the answer from my mouth was yes, of course I can sell a gas station. Right? This is second week in the business, second week being a
Mm-hmm.
license. So I met the guy because it was a warm lead through a friend of mine,
Yeah.
and basically told him I'm new in this business. I've never sold anything. I have a license, but it's not rocket science. I can learn it really fast. And
Yeah.
long story short, he gave me the opportunity, got the listing. 3 months down the line, I was able to sell a gas station as my first real estate brokerage opportunity
Oh
at
wow.
my brokerage. And since then it's been a wild ride. We've done everything for the last 20 years. I've been a broker for the last 20 years. And specifically last 15 plus years have been involved in the hospitality industry.
Wonderful, wonderful. It's a narrow way entry, and once you take that opportunity, it's always good that gives you that motivation to advance forward. Wonderful, awesome, awesome. So talking about the hotel aspect of things, the pivot and market dynamics of hospitality, income generating assets like that. Over the past years, you've shifted your core focus towards procuring and disposing of hospitality and income generating investment property. What kind of market signals drive that transition, and what makes this asset classes so attractive right now
Mhm.
that you would say, yeah, this is it.
Yeah. Great question. Most people looked at us, especially when we were, when I was doing my brokerage through Sync Commercial, which is in a partnership with KW Commercial, in about 2018, my other business partner, local here in San Antonio, and I,
Yeah,
we launched our company, as you mentioned, called Spur
yeah.
Equity.
Mm-hmm.
That's our private equity fund management company where we are investing with other sponsors, other developers
Mm-hmm.
in commercial real estate. I didn't really look at this as a pivot, even though I've been selling hotels for the last 15 years. So
Mm-hmm.
I've had a lot of knowledge in regards to what my buyers and my sellers were doing in the field. And we've done investments where we've done multifamily, we've done land development, we've done construction, industrial, other commercial assets, including now on the data center side where we're doing a project in North Carolina. But what attracted me to hospitality was that it stood out because it reprices every single night. And apartments, if you look at on the other hand, you are basically stuck on a lease for 1 year
Absolutely. Yeah.
before that repricing might happen. So hotels adjust on a daily basis
Yeah.
based on demand, right?
Mm-hmm.
And that gives operators tremendous flexibility. So this is what we've seen. This is what we like. So as an investor, I
Mm-hmm.
like to invest in businesses, not just buildings, not just real estate. And that's what that does. Being involved in hospitality business, you have many, many upsides. You can look at this because this is an operational business. You can
Mm-hmm.
look at this as that what can he do? What can he change? You can change
Yeah.
management, you can change, and you can have better revenue management information in there. You can improve the brand, you can improve technology.
Mm-hmm. Mm-hmm.
Small things that you can do can drastically increase your NOI in this business. And so that's what we did. I mean, today we invested in our third hospitality business. We started just last year on the purchase side, on the investment side through Spur Equity, and we've been very happy just because we're seeing that we're buying in a cycle where we're sort of at the bottom right now. And
Uh-huh.
as the market recovers, so will the investments on the hospitality side.
Right. Okay. Oh wow. Yeah. Yeah. So on when it comes to hospitality, underwriting hospitality in you talked about the bottom cycle right now, to which is 2026. Hospitality asset carrying a unique they carry unique risk reward profile compared to your traditional real estate. You alluded to that right now. How are you helping your clients underwrite operational risk, shifting cap rates and travel demands you talked about? Obviously those are the things that really had to the shifting in pricing in today's economy climate.
Yeah, great question again. I think, most people make a big mistake when they underwrite hotels, kind of like apartments, like what we are used to, because a lot
Hmm.
of us, when we got started in investing world, we were investing heavily in multifamily just because of the right timing, right? And for us, we started right before COVID, and really after COVID, we really took off because of the market and the demand that happened in the market.
Hmm.
As I said, first, hotels are businesses first before they are real estate, and they're very heavy real estate. So when we underwrite a hotel, we spend a lot of time evaluating the management before we evaluate the building itself. So we'll look at a couple of strategic things. We look at ADR growth, we look
Hmm.
at occupancy trends, we look at RevPAR, we look at maybe labor efficiencies, we look at, franchise agreements, because a lot of times hotels have a brand, a franchise that's behind it, that's driving a lot of value. So we look at that and think, hey, is that a good fit, or can we change the franchise? Can we do something else to it? What are the PIP, which are renovation requirements that are going to be for that franchise itself. We look at online reviews. We look at market competitive supply that's coming in the market. We look at the local demand that's happening in the area, and the revenue that can grow from it, right? So interest rates matter, obviously, right? Insurance costs matter, property taxes, all that matters. But great operators, they consistently outperform average, operators. And the one thing that is there is that a lot of people, a good operator will see value, and a subpar average operator will see a problem, right, in the market. So that's what we're focused on. We're focused in today's market on diversification. We're looking to see where can we go where there's multiple demand generators versus maybe one company or one employer that's giving all that growth in that area.
Okay, awesome. So awesome. So pretty much you look out for markets that that yields. Talking about yields. How do you unlock income generating yields for investors that seek a strong cash flow? Where are you finding these most resilient income generating opportunities today? What are the red flags and what red flags are you warning them to really stay clear of in terms of
Yeah.
ma-
So like, for us, in today's market is a very different market than when it was maybe 3 or 4 years ago, right?
mm,
Today's market, it really rewards a disciplined investor. And so we really like triple net properties. So we've done lots of even investments and syndications in the triple net space. Our clients love buying and selling triple net investments. And the reason for that is because the tenants are
mm,
responsible for all the risk. Risk meaning higher taxes, higher insurance costs, maybe maintenance costs. So,
yeah,
it really reduces the investor's surprise, because they are after a yield, they're after a return, and oftentimes
mhm,
you can get that, and you can beat money savings, lying in your savings account or in your high yield savings accounts, in a
mhm,
bank or anything like that. Plus, on top of that, you have tax advantages. You can still depreciate and do accelerated depreciation, just tax
mhm,
advantage strategies that we all talk about, within our investment firms itself. So in hospitality, we're always looking for operational upside, right? And so that
mm,
what that means is that by doing small things, how can we meaningfully increase the NOI within the space itself? Relationships are another comparative advantage that we have in the market itself. After being in this brokerage business for now over 20 years, we've built a lot of relationships with our clients. We've built it with owners, we've built it with lenders, we've built it with other brokers across the country. A lot of the opportunities never really hit the market, yeah, right? We can either buy or sell those type of opportunities before they even hit. So that relationship really matters a lot. And in terms of biggest red flag that you were talking about,
yeah.
I think people buy a lot of times based on emotion,
Okay.
right? And a lot of times people they ignore deferred maintenance, so they maybe underestimate insurance cost. A lot of times people assume that lower interest rates will solve every single problem. Obviously, that's not the case, right? You have to be an informed buyer and an
Yeah.
informed seller in today's market.
Absolutely, absolutely. And you're talking about, before it hits the market. That's what I want us to talk about. Deal sourcing, prospecting of off-market opportunities. As a broker, you have the inside scoop. What's the prospecting blueprint in terms of high performing as a high performing broker? Don't
Yes.
just wait till lease they create them. What's your day-to-day prospecting engine like? Uh, how do you source off market for hospitality and even some other asset class that you've done in the past and currently looking out for right now?
Yeah, I just pray. It's just joking. I do pray, but no, that was just a joke. So, you know, people think brokerage is about selling, right, or buying.
Okay.
I feel like brokerage is about serving, right?
Mm,
We prospect every single day, and so we call owners, we follow up, We return phone calls. It's crazy. A lot of owners will call us and say, I've left so many phone calls for people. They just don't return my call. Brokers don't return calls. It's crazy. I mean, that's the low-hanging fruit, that us brokers have. We return
Yeah.
phone calls. We review maturing loans that are happening in the market. We are talking to lenders. We are meeting operators. We are studying the market. And so as a broker, I think it's very, very important for us to be informed on what's going on around us. And
Yeah.
so most deals aren't, they're not lost because someone else was smarter. They're lost because somebody didn't follow up. So consistency every single time beats intensity, right?
Mm.
Right?
Mm.
You
Oh,
got to
wow.
be consistent. Consistency beats intensity, and that's something that I've learned from a lot of our peers that are out there. We're just doing what works at the end of the day. Most brokerage isn't about finding deals.
Mm.
It's studying and staying and having enough conversations, and when the timing is right, people will think of you at that point.
Wow. Wow. Intensity. You said, it's consistency beats intensity.
Absolutely. That's one of our advisors that had told me that a long time ago. We follow it to the T, right? We got to be consistent. We got to be consistent. We got to be, and that means what? Follow up,
Follow up there.
mindset, talking to people, and one day, because you're top of mind, as you're
Yeah.
top of mind, and as you're disciplined, when
Hmm.
somebody wants to do something, either on the buying side or on the selling side, they will think of you at that point.
Awesome. Awesome. Yeah. You can't beat that. So converting cold outreach to closed deals, cold outreach in commercial real estate can be a tough grind. You talked about intensity right now. I mean, consistency. How do you break through the noise in the high net worth property owners and institutional sellers?
So we don't really look at this as cold calling. We look at this as market intelligence. But that's what we're
Mm.
delivering. That's what we're
Mm.
giving. If you are a broker and if you know what's happening in your market, if you know what's happening in your area where you're at, because things are different, right? Where I am at
Mm.
in San Antonio and where you're
Yeah.
at in Dallas, even though we're in
Hmm.
Texas, different
Yeah.
markets. What about
Absolutely.
from Texas versus Florida or Texas versus California
Yeah.
or others, right? So you got to be an expert and you got to deliver that market intelligence to people. So when we call owners, we're just calling to listen, right? We're calling to share what's sold nearby. We're calling and letting them know what lenders are telling us at a given time. We're telling them what cap rates are doing in their market. We're telling them who's buying, who's exiting,
Hmm.
what owners appreciate information. So if you consistently leave people, right, with some market knowledge and make them smarter
Yeah.
on that every conversation, as I said earlier, eventually when they need to do something, they will think of you. And
Uh,
for us, it's not about getting that listing or selling a property or buying a property. It's creating that relationship with them.
Relationships. Awesome. So relationship leads to the confirmation of you getting the deal when the time is due. That's
Correct.
that's that's awesome.
Correct.
So when you consider sellers versus buyers in 2026, when disposing of assets in your market or any other market that you guys are bullish on, right? What strategies are you using to align price expectations between motivated sellers or sometimes even realistic buyers also too? Uh,
Yeah, man. I mean, this is an age old phenomena, right? Buyers are here and sellers are here, right? It's always the case. Doesn't matter where this market is. And the hardest part is bridging that expectation.
yeah,
As a broker, right? As a
yeah.
broker, I can't be taking one corner or one side, right? I have to understand really what the buyer's need is and what the seller's need is, and
Hmm.
bridging that expectation. Many sellers still remember 2021, right after COVID, and
Hmm.
2022 when the market shot like a hockey stick, right?
Yeah.
And so that's what the pricing is in their mind. And most buyers today are underwriting with 2026 realities right now. And you look at the realities right now, your interest rates are high, your taxes are high, your insurance is high. Maybe in
Yeah.
our world on the hotel side, the ADR growth is not there. Occupancy is not growing as much, right? More
Yeah.
competition maybe is coming, right? So for us, it is looking at and understanding the data. And I tell the sellers that, price your property where buyers are today, not where the market used to be, because that's what most people think when they look at that. Because obviously you may and the seller may end up just owning their own property or buying their own property because they may
Yeah.
stay in the market much longer and they don't have a choice but to keep the property. And
Yeah.
then they may have risks and all that stuff, right? So you have to price it accordingly. And for buyers, I encourage them that don't just look at the numbers, also look at maybe management improvements, what can they bring to the table? Can they grow that ADR? Can they grow that, or can they reduce that expenses, right? So not only
Yeah.
is the NOI going to, is the revenue going up, but can they reduce that expense? And a lot of times we're seeing in the market that when our owners, especially folks that have 5 to 10 properties, when they take over an institutionally owned property, and when they're managing it through their own management company or in-house, they're managing it, they can generally reduce a lot of those costs because there's some costs that are in the P&L for this bigger management companies that obviously they have layers and layers of employees and other things that they can shave off at that point, right? So we're just
Mhm.
always looking to see, because today's discount can become tomorrow's equity for the buyers. So when we
Absolutely.
when we talk to the buyers, we just say, look, yes, understand what's going on in the market today in that property that you're looking at and the numbers, but don't
Yeah.
discount what you can do. And then maybe we can bridge that gap a little bit where the seller's at and where the buyer's at.
Awesome. So in your years of brokeraging, we're talking about business development, personal branding right now, building a standard corporate identity in commercial brokerage is can be daunting sometimes, most especially where you have a crowded space. How have you intentionally built your personal brand in sport equity and your corporate identity to become a go-to advisory in hospitality and other investment that you guys are doing, right?
hmm hmm Yeah, thank you. Thanks for asking that question.
Yeah,
So I've been doing this over 20 years now. My
yeah,
first 5 years, I was a general broker. I pretty much
okay,
did everything. Anything that landed, gas station
yeah,
landed in my lap. I did
yeah,
gas stations. I did a lot of gas stations. Bought and sold specialty retail, specialty asset classes. Somebody
okay,
came in with the land, somebody came in with the lease, somebody came in
mm,
with industrial. We did all of that.
okay,
And eventually I learned that you cannot be a master of all.
hmm,
Okay. I tell people that you have to focus and you have to know what your superpower is. What is the one
hmm,
thing that you are really good at? And about 15 years ago, we
hmm,
learned that, and we started focusing on the hospitality business at that point. Whenever people think of Singh Commercial Group, I want them to think of buying and selling hotels and investments. And then so for me, we tell our junior agents that that when we are going out there intentionally, we're going out there with letting people know that we are fiduciary, we are buyers and sellers of hotels for our clients itself. We're in a big market. I think when you serve a big market, I
yeah,
am in San Antonio, seventh largest city in the United States. I'm in
hmm,
Texas, such a big state.
yeah,
You can really focus on an asset class. But if you're in a secondary or a tertiary market as a broker, your focus becomes not one asset class, but it becomes a geography at that time. And for me, I've been lucky enough to serve the hospitality field, and we do some investments for our clients. We buy like a shopping center or buying a triple net income generating property. 80% of our business, core business in our brokerage is hospitality. 20% is others, meaning on the investment side. And so often depth is going to beat width, right? And so
Yeah.
if you go deep, after you go deep, you can go wide. But going
Absolutely.
deep, going in one sort of superpower, as I was talking about earlier, in to me at least is very, very important in the market that I serve. So being intentional and being a master of one niche
Hmm.
oftentimes is going to create opportunity than maybe, looking at things across maybe 10 different platforms at that point.
Absolutely. It helps to focus on an asset class, and people can go to you that when they think of hotel, they can go to your brokerage.
Yes,
That's
sir.
awesome.
Yeah.
So relationship capital. Well, we've been talking about relationship, and real estate is pretty much, just like you've alluded to in so many of the conversations. Relationship is big. What about relationship capital in commercial real estate? Transactions are transaction, but brokerage is relational. How do you nurture long-term trust with clients beyond just a single buy and sell transaction? I want you to elaborate more on that. So
Yes. Yeah, so obviously there's a lot of different platforms that are out there. Digital presence is no longer optional, correct? We are in a
hmm
digital space, we're in an AI space now. And so
yeah.
being on LinkedIn and being on like podcasts like yours and
Yeah.
newsletters and videos, they really allow you to meet people before they really meet you, right? They
Mm,
can sense of who you are, their presence, because people are informed. They're informed buyers and sellers. They know about you before they even call you. And so, we have to be out there. But digital only is not a relationship, right? Face to
hmm
face builds it. So
hmm
it starts with digital in our world right now, but face to face is very important. So for us, the best business that we've done is with clients that we've often met in conferences, in trade shows that we go to, in industry events, and sitting across the table from our clients. It's very important. So technology can scale relationships, but
Uh-huh.
personal interactions, that deepens it. That relationship,
Absolutely.
and you need both in this world right now.
Awesome. Awesome. I can agree less from that. Absolutely, it's a relation, and also you can't take for granted a lot of the facilities we have, the likes of LinkedIn, the likes of every spaces that you can also leverage out there in terms of media. So we're going to talk about some master classes right now. Your advice, future outlooks and things, the big mistakes investors make. I mean, you've seen a few of them out there. Looking at hospitalities and other income generating space today, what is one common mistake you see investors make during acquisition phase?
Yeah, well, we've made a lot of mistakes ourselves. We're always
Yeah,
learning,
I
we're always
know.
learning from. Um,
Absolutely.
yeah, yeah. I guess one of the biggest mistakes I see a lot of times people rely either on emotions or on
hmm
spreadsheets, right?
Oh, wow.
And successful investors, I feel they do both, right? They obviously numbers have to work, right? Numbers
hmm
have to work, but
hmm
eventually you have to make a decision, right? You have to make a decision. Otherwise, you're in this analysis paralysis sort of
Paralysis. Yeah.
stage, right? We keep on looking. I know this one investor that keeps calling me. He's been calling me for 3 years now.
Oh,
Market used
wow.
to be all-time high. Now it's kind of gone down. Eventually, it will rebound and go back up again. Nobody has a crystal ball when, but let's say 6 months, year, 2 years,
Yeah.
whatever the time frame that everybody's thinking out there. But this guy keeps calling me. He has spreadsheets over spreadsheets, and he's
Mm,
reviewing 200 hotels. And I call him and say, dude, make a decision, right?
Mm.
Make your decisions. There's no perfect timing. You know, nobody's going to ring a bell at the bottom and say, okay, we've hit the bottom. Now let's
Yeah.
go start coming back up again. And so the best investors, they balance conviction with data.
Mm.
And that's very important. And so I think that's one of the biggest mistakes that I see investors make is that they don't make a decision or they make a decision too fast because they lie directly on their gut. Gut is important, but data and gut combination of that is deadly.
Wow. Data with God conviction. That's what makes it happen.
That's what makes it happen. That's what makes it happen. Yeah.
So talking about that, advice to upcoming and you have you talked about some junior brokers in your firm also too. What kind of advice are you going to say what you have for upcoming brokers if you going to advise a younger broker looking to really have impact on the niche of commercial real estate?
Yes, sir. Yeah.
What skill set would you transfer right now?
I mean, I would say maybe three things. I think if I was starting right now today, I
Mm.
would lead generate right religiously every
Wow.
single day, and you'd be surprised that when you start calling people, texting people, emailing people just to be their advisor, just to be their support out there, what happens? Phone call starts ringing at that point. So lead generation, and then not just that, you got to follow up, right? When people are calling you, you got to reply back. You got to return your phone calls. So lead gen, you got to follow up, and
Mm.
market knowledge. You have to know your market. You have to know the market in the back of your head. So when
Yeah.
people call you, and then everything else can come sort of later. But if you're a newer broker, you have to do these things. You track your activities every single day, develop consistent habits, right? Not just spur of the moment, develop consistent habits and don't chase every single deal. Success usually comes to people who focus. So, that one thing that we were talking about earlier,
Yeah.
that is, pick one, become an expert, and
Yeah.
things will come to you.
Awesome, awesome. So for you newbies out there, you hear it from the master's mouth. Is you gotta stay focused. You just have to be on top of lead generation in terms of relationship. Talk about relationship. It makes things happen in commercial real estate. So another question I want us to answer before we leave today is that the looking at this, I call it master key question for today. Looking ahead at the rest of 2026 and beyond, what is the single biggest trend or shift in commercial property that serious investors need to pay attention to right now?
Boy, that's a loaded question. I wish I had the answer for that. Yeah. I mean, I think 2026, in my opinion, will be remembered probably as one of the better buying windows that we've had for years. Because I
Mm.
feel, and I'm talking on the buying side, because
Yeah.
I feel like we're at a cusp. Maybe we may go down a little bit more. Maybe we might just rebound. But
Hmm.
we've been sort of, at this stage for a few years now. And as we know in our world, that when interest rate starts going down, values start going, it's inverse effect. They start going
Yeah.
back up
Hmm.
again,
Hmm.
regardless of the asset class that you're in, right? And and
Yeah.
and, no, and nobody's going to be ringing that bell at the bottom saying, okay, we're done.
Yeah.
Now let's start,
Yeah. True.
let's start going back up again.
Mm.
So many owners are facing loan maturities right now. A lot of lenders are taking these assets back. Some people are restructuring their debt currently right now. That's creating opportunity for a disciplined investor, right? And so as interest rates will eventually normalize, as we kind of just talked about, we will see that that access to capital will become come back again. People will start wanting to invest again. Your limited partners, your LPs will come back again. Right now,
Yeah.
everybody's reserved, right? The
Yeah.
confidence levels are kind of low at this point. And as
Yeah.
confidence goes down, people want to touch and feel their money before they give money to you and say, here, Ola, go and invest in something, right? But that will
Absolutely.
eventually come back again. So the biggest mistakes I feel like investors make is they wait for that perfect time to feel
Perfect time.
comfortable, um, and um, and so maybe the opportunity might be gone at that time, right? So you have
True.
to be knowledgeable about the data, and then you got to take action. Great investors, they don't predict the future, right? They can
Mm.
predict the future perfectly. They can just take actionable steps. And so I would say, you don't build wealth by waiting for that perfect time. You build wealth by recognizing imperfect opportunities before anybody else can, and that's it. And sometimes that could mean that you may be lucky and you can hit something, but know your market, know your data, and then once you do that, take action, because action, I believe, is going to take you and give you rewards more than anything else will.
Absolutely. Awesome. Talk about ton of value, Rav. You brought so much value today to this show. And honestly, you talked about a lot of things, and most especially in the hospitality space. And my viewers would would be taking notes right now, actually. So thank you so much, Rav. You've been a ton of value, and practically, how do people get across to you? What's convenient for you in terms of? I'm glad the fact that you talked about you pick up your calls. You pick up your calls. You return your calls. That's a good thing. So
Yes.
how do people get you easily?
Yeah, so I'm on all the platforms out there. Yeah, Instagram, LinkedIn, Facebook. Obviously, it's the easiest way. My website. If you want to invest with us on maybe another hotel that we're looking at or some other properties, Spur Equity, SPUR equity.com. And if you're looking to buying and selling a hotel, that would be through singhcommercialgroup.com. Singh is my last name, so singhcommercialgroup.com. I'm playing in both sides. I'm still a broker, and then we're still as a fund manager investing in lots of different commercial aspects, commercial properties. So reach out to me. I'm readily available, and if anybody wants to just pick a brain and pick my brain and talk about whatever's in your mind, happy to discuss it with you.
Awesome, awesome. As you can rightly hear what he's saying in terms of one of the best things you can really have when you're a passive investor or even a GP is having somebody knowledgeable as part of your professional team, a broker that knows, a broker that is a broker also to an investor too. That's a ton of value. That's a ton of um know-how when it comes to having a team member also too, and also too he's been doing it for quite a bit, as we talked about it in the San Antonio Texas market generally also to in
Yeah.
consideration. So do not fail to reach out to Rav Singh if you want his service either as a broker and also to as a investor, also to partnering with him in some of the deals out there. So it's been wonderful. It's been a ton of value time with you, Rav.
It's my pleasure.
We would keep this going. We'll keep the conversation going. Okay.
Yes, sir.
so
Yes, sir. Yeah.
so thank you for joining me once again here at Commercial Property Club, our podcast. It's our master series. I've had a ton of value, a ton of time with Rav Singh. I will see you another time when we bring a master on our show. Thank you so much.
Thank you.
So, Rav, thank you so much for joining us,
Yes.
and I appreciate you. All righty.
Absolutely. Absolutely. Good luck. Good luck with everything that you do, Ola.
Thank
And
you.
hope to
Thank
see
you.
you in one of the
On the conferences.
yes, someplace, soon. We
Yeah,
haven't
yeah.
done a whole lot lately, but we
Yes,
we
yeah.
intend to just, come back on the circuit again next year. So,
Awesome, awesome, awesome. All righty. Thank you, sir.
okay, you take care. Thank you.